Hi, my name is Ujat and welcome to Rock with Options, a show for all your option needs. We recently discussed about a very simple, systematic, mechanical option strategy that can be employed on Nifty on a daily basis. If you want to learn more about the mechanisms, the outcomes, the profits, the rewards, and the risk associated with this daily Nifty strategy, do click on the link above. In this video, we're going to look at how can we tweak or how can we adjust that strategy to enhance our profits and outcomes. Let us dive in. So we're going to talk about a series of adjustments that can be done to this particular strategy to enhance the outcomes. Today, we're going to look at how we can change the stop loss that we implement on both legs of the strategy to enhance the profits. If you remember in our first video, in our introduction video to the strategy, we talked about placing a 25% stop loss on the premium collected on each of the legs. So you're going to place a 25% stop loss on your C leg, 25% stop loss on your P leg. In this strategy, in this adjustment, we're going to enhance or change that stop loss. Now let's look at the detailed mechanisms. Not much has changed. You still enter at 9:20 every day. You're going to sell a short straddle, closes at the money short straddle. That means you're going to sell closes, weekly call option. You're going to sell closes at the money weekly put option. The exit has not changed. You come look at your positions at 2:30. If there are any active positions, you square it off manually at 2:30. What has changed? The stop loss. The stop loss has now been increased from 25% to 40% of the premium collected in each leg. So if you collect 100 rupees on your put option by selling the put option, the stop loss now for the put option is 140 rupees. Before it was 125 because it was 25% of the stop loss. What happens by doing this? By increasing the stop loss, you are basically increasing the margin by which Nifty can swing. So Nifty can be more volatile, swing from by a bigger margin, still your stop loss doesn't get executed. This is very advantageous on days when Nifty is very volatile, swings from one direction to another, and by increasing your stop loss, you are ensuring that the probability of hitting the stop losses are reduced, thereby increasing your chances of making money. Now let us look at the back-tested result to see if the strategy actually works. Now that we have understood the mechanisms of this adjustment, let's apply the same on the live trade that we have been tracking in this video series. If you have missed out on the setup and the outcomes of this live trade, do click on the link above. If you remember, we had sold a weekly Nifty short straddle at 16,400 and placed a stop losses at 25% of the premium collected on each leg. Now by increasing the stop losses to 40% of the premium collected on each leg, we are now able to accommodate greater volatility in Nifty. So the Nifty can swing by a greater margin without triggering either of the stop losses. This increases or enhances the probability of profit in this particular trade. One has to also note that since we have increased we've widened the stop losses, if there is massive swings in Nifty on either directions and both stop losses are triggered, you will see a bigger negative number. Now that we have understood both the risk and reward of this particular trade, let's look at the back-tested outcome and see if there's any true value in this adjustment. Now let's look at some of the back tested data and compare it with when we had a 25% stop loss. So the chart on the left, the table on the left is for 40% stop loss, and the table on the right is for 25% stop loss. We did this experiment for the last 3 years. So we had 157 expiries during that period. You right away see the win rate is at 69% versus 63% for 25% stop losses. The average profit has come down because there have been more win days. The average profit in case of 25% is higher because there are lesser win days. The winning streak has considerably increased to 24 days. The winning streak was only 13 days in case of 25%. On the negative side, the losses are almost the same, very close to one another, but the max losing streak has increased in case of 40% by a day. Looking at these numbers, it is still in favor of our 40% stop loss. Now let's look at the P&L. The overall profits by employing 40% over the last 3 years is almost close to 50,000 more than with the 25% stop loss. Remember, all of these outcomes are one lot of straddle. The average profit has gone up significantly from 402 to 463. But two things to be noted. The max drawdown, although less, took us a longer time, 79 days, to hit back the peak. The other thing that to note is the max loss. Max per day loss is now at minus 11,000. The max per day loss when we had a 25% stop loss was lower. That is understandable. When you increase the stop loss, when you go wider on the stop loss, and the Nifty is extremely volatile and hits both your stop losses, you are going to see a bigger loss, a single day loss. When you have smaller, shorter stop loss window, then your max loss is always going to be small. But looking at the data, overall, it looks like 40% stop loss has yielded better results. Now let us look at month on month profitability. Now you're looking at the monthly return, monthly profits of each of the strategies. On top you'll see for 25% stop loss, at the bottom it is for 40% stop loss. Right away you'll see there are more green buns when you're using a 40% stop loss. Even the drawdowns are much better when you're using a 40% stop loss. The return profitability on a yearly basis is pretty healthy compared to the 25% stop loss. However, the max monthly drawdown in case of 40% was minus 14,000, whereas for 25% stop loss it was just 11,000. Again, overall, we find that using a 40% stop loss has yielded better results than when you're using a 25% stop loss. So in summary, by simple adjustment in the stop loss, we have seen greater impact on the outcomes, significantly more profits, a significant increase in the win percentage. But again, because we are increasing the width of the stop loss, you will see greater swings in your P&L on a minute by minute basis. It is important that you stick to the mechanisms. You need to have a strong mind. But do watch out for drawdowns and max loss per day, which could be a little on the higher side because now we have increased the stop loss. I hope you found this adjustment useful. If you like what we have watched, do subscribe to us. We will continue to share various adjustment techniques that further enhances your outcome. Thank you.